Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts, and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, let's take a look at the gold market. So despite it was a really tough week and a lot of trading stops we've got in the gold market, but in general, all of them that we have discussed were relatively successful to us. So on euro currency it was a bit different story, as market has failed to show any even minimal bullish activity, especially on background that the potentially actually in the background of the grabbers that we've got, and it was few grabbers in a row, but all of them has failed. On the gold market, it's absolutely different story, and overall bullish performance has happened finally on Friday, as we suggested, and even on the other days, the bullish stops that we've got has shown has reached some targets. In this week, in our weekly report, we have taken an in-depth view on the gold market. As last week we said that it was some concern why the investors were starting to prepare some for big changes on the gold market, as we saw that net bullish position has jumped significantly. So it was extended for 10% in last week, and it was really massive purchasing of the gold and opening the long position in the gold market. It seemed that investors are preparing to something. Now it becomes clear that the major reason why gold has got some inflows was adoption of the 1 trillion pack from the Congress and so-called infrastructure pack. And it should come more for 1.65 trillions later. But occasionally market has got additional support from the Bank of England. In fact, if you will take the in-depth view on this subject, on this moment, you will see that not the decision from the Bank of England itself has pushed the gold market higher, but the decision from the Bank of England actually shown that central banks are not intend to rise rates too fast. And actually, it was the clear signal to the markets to hold the tightening horses, actually. Because Bank of England was as close to the rate decision as nobody else. Yeah, and even they have pushed the back pedal. So that just tells you that not the Fed, not the Bank of Australia, not the Bank of England intend to rise rate. Even if Bank of England or Bank of Canada will change the rate, it will be just single step. It will not be the cycle. So, and that actually changed the rules of the game here. We hope that we will see some impact on the markets, as investors need to absorb and adopt this new information. They need to think about it. They need to make the investment decision. But our suggestion, the effect should be so that the life of the gold market become easier, and it will have the more chances to show some short-term bullish context. Because based on the information that we've got from the Fed, it seems that until the end of the first quarter of the 2022, central banks intend to keep the general policy that should give the gold chances to breathe, and real interest rates will remain in low levels. That's the first moment. Second moment, the cornerstone of this background is inflation, as Fed will keep a close eye on inflation, and they will just hope that inflation will not start rising. So inflation, we see that's primary risk for overall policy. We take the in-depth view on this subject in our weekly report, so you could read about it, where we actually step by step discussing this new environment for the gold market. In the shorter term, as you can see, overall upward impulse on Friday and on Thursday actually was nice. This market shows good performance, and we think that we could focus on the two upside targets. So currently, of course, we are not considering taking the short position. So invalidation point for a short-term performance stands right here. These lows when the thrusting action started. So if somehow market will return that back down and drop below the C point, well, that will be destruction of the current bullish context. So it means that for our trading purposes, we need just the most recent swing. We do not need to consider some A point or even lower. So that will be invalidation point for a short-term step. On the way up, we have two targets. And the first one is 1830. It's nearest destination point that includes actually strong resistance here. It's important even on the monthly chart, because you can see we have here as equal tops. And this is very important. It means that here's a lot of either sell order stands or sellers step in once market hits the 1835 area. It's also the 618 level. And take it with long-term trend line, which is actually the border of the long-term weekly triangle. So that will become very important level. Slightly higher stands the OP around 1850. That's the next destination point on the daily. Well, taking it all together, it means that here we could consider some pullback, trying to take the position with the stops below the C point, and with the target either first it's at 1830 or even directly on 1850. Besides, if you'll take a look at the hourly chart, you could see that the XOP target of our head and shoulders that we discussed on Friday also agrees with the daily target. So it also stands for around 1850. So here on Monday it could be a bit different performance. For example, market could try to hit the OP first around 1826 and then start retracement, or retracement starts first. If retracement starts first, then the level that we need to consider is 1805 probably. If retracement starts after the OP will be reached, in this case, market could try to complete the 18 even, which will be also the confidence support. So that's two levels that we're considering. 1781 is also possible, but it will be worst scenario, although it is not vital, because for a vital point here is these lows. But anyway, drop in the current circumstances below the neckline tells you two things. First of all, the hand shoulders is not valid anymore, because market will drop below the lows of the head on the way down. And second, overall strength of this scenario is not very significant, because market will show very deep retracement, but it will not be totally destroyed. So bullish context will remain if even market will drop to the 1780. But hopefully we will see retracement to one of these levels, so 1805, or it will be 18 even. So that's what we intend to keep an eye on. Speaking now about our previous trades. So if you remember, well, first our trade with this minor retracement to the ABCD target has been done. When we said about the XOP, here was XOP actually in confidence resistance, we said with this butterfly, minor butterfly, speculators could try to take the scalp short position with the minor drop. This has happened. So the right shoulder was indeed very small with this pattern, and market has accelerated up. So we said that with these three drives, this market could keep going higher, and actually so it also has happened. So in general, gold market shows relatively logical performance. So we do not see here some irrational steps. So everything quite logical in the current environment. So let's hope that it will last as long as possible, and next week with this setup we will get the nice chance to consider and take in the long position.